So do we have a bull trap here or another massive trend leg to the upside coming? Let's get into our weekly SPY SPX outlook and find out, and we'll break down the tape here again. If you're not done so already, don't forget to give the video a thumbs up, subscribe to the channel, come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Absolutely killer the last 3 weeks here, closing out multiple winners and several more today. Absolutely on fire here. Excited to have a lot of the new faces in there and looking forward to working with everybody. Also, really quick before we get into it, I am going to do the webinar. I'll make an announcement tonight or tomorrow on that. I think it's going to be on like discipline, position sizing, and just kind of like experience techniques, but more so kind of like trader psychology. That's kind of what I got from the suggestions, and I also value this very much. So I think you guys will get a lot out of it. I'll make some announcements on that though very shortly. Maybe another blog post too. We'll see. But anyway, let's get into it here today. So Spider's closing flat. I talked about continuation to the upside from yesterday, and great breakout call, I guess. Wednesday calling for the break. I thought we'd get some continuation, and it was kind of partly right. We had some in the morning, but we did get it on the Qs. Qs up 0.5% just about. So QQQ having a good day here. Apple up nicely, just below that 245 handle. TSM also had some news this afternoon, popping it off of the 100-day moving average. And you had stocks like Tesla, which were down a little bit today, but they helped give us a lift early before kind of coming back in. NVIDIA also up 2.5%. So we had some, mostly strength out there. IGV also managed to scratch out a nice little gain there. So the NASDAQ 100 still led, so kind of partly right about continuation. And you can see we're just pushing through that wedge top. And we did technically close. So we can see that breakup bar. We technically closed above the FOMC reaction on QQQ. One of the things I've talked about all week long is this relationship with the NASDAQ and the Russell. And you can see here, S&P futures, not really much changed on the COTs, but net positioning is starting to change a little bit in the banks on NQ. And this is pre, CPI for what that's worth. But we are seeing that uptick, and we're seeing sort of a little bit of a downtick, or at least a slide in the Russell. They're starting to get net short here for the most part. Why that is, I think a lot of it has to do with hedging into tech earnings, and just kind of like that, I guess, crowded NASDAQ long that was kind of coming into late January, which caused this chop here. But after that rolled off, we're now seeing the IWM, which was kind of outperforming for a few weeks. It was going sideways, but it was outperforming. Red today and barely green on the week, right? It was only up. I think it actually made it. Yeah, I think technically negative for the week. Let me just see the RUT. RUT technically green, but flat for the week versus QQQ, bright green and a new all-time weekly closing high too. So we're seeing that kind of rotation out, but it's very much single stock based. Like Microsoft, Google down today. Meta just continues to piss everybody off. This is going to 750, so it might take 23 or 24 consecutive days, but that's where it wants to go. So it's kind of a little bit of haves and have-nots there. But right now, bottom line, this market is going to be ignorantly positive right now in the near term. This was the key here. CPI, bears got everything they wanted. You got everything you wanted. DeepSeek, inflation, tariffs, right? Horrible tech earnings. Not horrible, but not good, and the reactions were not good, right? And you could not break SPX 6,000. Dealers start buying back stock. We start going up. And it's been going up in, like I said, like an ignorant kind of fashion, right? Just up, doesn't matter what the data is. PPI was hot yesterday, didn't care, right? Retail sales crashed today, nobody cared, right? So just kind of getting that bid here. And it should be like that into, I would say, mid next week. I'd be careful a little bit around expiration and next Friday. FEBOPX often presents a little bit of a bear window. So for the bears, this is your best chance of anything happening. An up move here, and then you got to get a failed breakout on the weekly. But that still involves new all-time highs, I think. I mean, obviously, we got a point away today on the SPX, and the Spider technically did make a new all-time high. And I think, well, technically yesterday we Yeah, we never made a new all-time closing high technically. But I mean, it's, yeah, it might as well be there, right? So I think that's the case here. My measured move's telling me maybe even 6250. 6150 will be a speed bump at least. But if we just go off this measured move on ES, like I suggested, you know, the deep seek sell, there's 200 points. Tariff sell, there's 190 points. You know, what's 200 plus 60, 14, you know, 90 plus 60, 14, 6,200 on ES. 70 points, you know, I guess it's closer. Well, we might have to adjust that now. So let's just say 62 even. I think the ES spread kind of tightened up a little bit recently. But either way, higher for now. But be careful. Volatility is cheap. Buy it when you need it, not when you have to. That may be a good mantra here. If bears can't do anything, though, in the next 2-3 weeks, we're going a lot higher. That's the other side of it. Again, you know, textbook pattern here, up, 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 boom, 1, 2, 3, pullback, pop. You know, McClellan here, this is, you know, the most oversold since the bear market low in 2022. So this could be telling us that we're at a low here. If it's not, you better hope for a uptrend after distribution, Wyckoff top. But weekly is still fine. You got to go with the trend until it ends. And we have no indication right now that that's not the case. QQQ, again, a little bit of speed bump at 540. Again, we told you not to worry about 535 right now because it's been hit so many times. And 540, a little bit of a level there. After that, it's like there's a couple other areas. 543, I think, was a level I saw. Oh, we'll get that when we get there. And 230 still on IWM. Here's the positive for IWM and RTY. I like looking at it. Nice higher lows, and it's working off that trend line too. And that was another reason why I like the NQ. Higher lows, right? It's always a good sign. Diamond here, little flag there. That can catch up. 452 and then 457 if it wants. So that's still looking okay. Again, give the market the upside bias till it gives you a reason. SMH up 66 cents. SOX up 23. IG, oh, let's cover NVIDIA. 140, still going there. Let's see if it gets to 150 again. It might. IGV up 9 cents today. Just really didn't, I mean, it would have just been a nice little cherry on top to close above that reversal high. It didn't do it, but it did close above 106 on a weekly. So, you know, there's no problems with this chart. I'm just going to give that the upside bias to 110 area. Transports here, good day. Up 1.3. Retail sales fell off the cliff. All right, well, that's nice, but transports are up. You know, 1.3. 16.6 still a big point of control. It is above the 16.2 point of control. Let's not get too complicated here. ZT up. And again, retail sales down, bonds up. I think bond shorts are in trouble here. So if you want to read my article on it, it's right here. And I said this could be a thing. So why bonds can still rally despite inflation being defeated? That's all about the positioning. You know, positioning moves markets, not the news, right? So we got the slice on CPI. We'll use the 10-year note. We got the slice on CPI, but look at where it closed. Look at where ZB closed, right? And you can't say, oh, it was retail sales. Yeah, retail sales were weak, and that's why it pumped. But why did it pump on PPI then, right? So bond shorts in a little bit of trouble here. I think TLT, if this can establish again, this can go to 93. Which I think would be a fade opportunity. For rates for the 10-year, you're looking at, I think, 4.25 area. Sorry, 4.5. Just say 4.2 to 4.3. That's not a prediction. That's just a if-then. I lean that way though. XHB up 71 cents today. I don't like this chart. I don't like it. This is not good. Your positive here is that the weekly has still got that big green and you're inside of that. And you could have a pullback here for a pop, but you're inside of the larger red though. The positive also is that the trend is still mostly up here. I mean, there's really not broken yet, but it's getting close. So this is something I'd want to see turn around here. And it's not holding the rally with bonds rallying. That's a little concern. VNQ, on the other hand, it did finish red today, but notice the higher high. And notice how it peaked above that previous low. So 92.37. Let me get that exact. So 92.37. It peaked above the low. I'd love to see it close above the red high, though. There. So 92.37, 93.27. And then you got the 100 MA coinciding right with that. So one way of looking at it is you got sloppy bull consolidation here. The other way of looking at it is it could just be like a bear, kind of a bear wedge. So we need to clear that to negate the bear pattern, the bear part of that pattern. XLF up 10 cents, like that high, so it's fine. KRE, up 20 cents a day, it's fine, no problems here. Maybe a lower high, but right now no problems. Broker dealers, never a problem there. Yeah, Lord help us if broker dealers ever have a problem, which they will. They're parabolic on the monthly, but not right now. Oil down 64 cents. I have no trade on this. There's just nothing to do here. You got lower highs, no follow through on the breakout, but it's not really a short because you're kind of shorting into the middle, right? Where there's support at 70. So nothing to do here with oil. I'm watching this. If this starts selling off, though, expect a peace deal. That somebody will know beforehand, before it's announced, and you'll see it in the price of oil. Interestingly enough, though, XLE holding up. It was green today while oil was down. XOP green while oil was down. OIH red, but not down a ton, down $2 on a $208 index. So not really bad. I end up almost like a sloppy flag here inside of this green here. So energy, okay, I'm not touching it though. Just patterns just aren't good enough. One part of energy that's not good though is uranium. CCJ, it's holding this low by the skin of its teeth. It got a nice bid in the, looks like the end of the day. Yeah, looks like it got a pop off that. So I don't know if somebody came in to save it there. But URNM, not good. URNJ, not good. Those bear patterns are playing out. You're going to need a reversal to make those turn into liquidity grabs, on next Tuesday. Good old nukes, though, still holding up fine. No problems there. Nat gas continuing up. We talked about 380. That's where it went. It's stalling out. No trade on it right now, but it does have those weekly higher lows and higher highs now. Nat gas turning around. Dollar down. Why is the market rallying? There you go. Lower high. Excuse me. Lower high, lower lows. However, weekly 20 MA is still right here. So it's on weekly support. My general lean is we'll probably go test 105.50 at some point. I'm not saying it's going to be in a straight line. This pullback, believe it or not, it's volatile, but on the weekly, it's still kind of orderly. So it's not the worst. And you did come off the lows by the end of the day. If this can reclaim 107, it might squeeze up a little bit. All right, now on to the part everybody's throwing themselves off a cliff already. That's it. The gold bull market's over. Turn the video off right here. That's it. Just forget it. No, I'm just kidding. No, seriously, that's like the sentiment right now, though. I mean, we'd had a red day, guys. It's okay. It's just a red day. By the way, I just did some work on this measured move here. From the lows to the highs, it's just simple. It should go to 3,100. Now, can it take a few weeks to get there? Can it just need to base a little bit? Yeah, probably. Well, one of the reasons why I said 3,000 back in November or December, I said by late quarter 1, early quarter 2. And by the way, we're at mid quarter 1 and we're already basically there. But one of the reasons why seasonality is pretty spot on. It was spot on at the end of the year, that pullback in December, tightening range, and then kind of a thrust into mid to late Feb. And yeah, maybe this was some pullback action into early quarter 2. Just like this, it's not going to go up in a straight line forever. You just need to digest. Let's see if we get a tightening range again. I did tell you on Tuesday though that there was some distribution, like there was definitely distribution there. This is definitely some, but it takes weeks, it takes months. I mean, hell, this was distribution, so was this, and then guess what? It just kept going up after that. So I think 3,100 is my new target. Again, here's the other one too, silver. I did sell part of my silver position up at the highest today. Why did I do that? This was target 1 anyway, because Anybody who bought this, like bull flag, thinking of bull flag, they're trapped, right? They're going to turn into sellers as soon as they get break even. So they turn into sellers. But additionally, retail sales were weak, bonds pumped, and silver didn't pump with it. That's a red flag. So we knew there was distribution there, and we took some gains right in this area. I'm still holding gold, I'm still holding silver long, and I'm still holding my Sprott too, although I did trim that today also with those reversals. So those are all risk-free now. I plan on holding them into quarter two, but they are all risk-free now. So yeah, I would say near term, maybe a little bit of a caution flag, yellow flag, maybe an orange flag for precious metals, but I don't see if we close, this is an example I used today, but just pretend this tail doesn't exist. What if we just closed like right here today and just did this? Would you still say that it's broken? Of course not. We're still above, I mean, all the moving averages. We didn't even take out yesterday's low. I mean, on gold we did, but we didn't take out the inside bar low. Platinum, with all that selling, didn't even get to the 20 MA. Palladium didn't take out yesterday's low, so I'm not worried about these guys right here. Copper, we told you 4.8 would be resistance anyway too, so there's a reversal candle. So step back from the ledge, it'll be all right. Copper, well, there's, oh wait, we just talked about that. Bitcoin, long week, we need the 3 days here. Bitcoin, again, it's just been sideways ever since that reversal. I'll say the same thing I've been saying forever. The weekly chart is ready to go if they want it. Not saying it will, but it's ready. I still think Ethereum tries to retest 3 here pretty soon. So let's keep it simple, but not a lot going on in the crypto space right now. So spiders here, short term, again, market acting well, no problems. Dips are being bought aggressively by dealers, as I said they would. And I don't think that's going to change until at least, you know, it doesn't change next Wednesday. It's not going to change until the week after. So don't fight the tape until the market gives you a reason. Look at volume. Lowest volume on record, non-holiday, if I'm not mistaken. So don't fight that dull market. Anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find me on carnivoretrades.com. I will see you guys all next week.